Once the Asian titan that buoyed global growth, China's economy is slowing. The world's second largest economy grew 7.5% in the second quarter. That's down from 7.7% in the first quarter and marks the slowest pace since 1990. China's trying to pivot its economy from one driven by constructing roads, bridges, and buildings to an economy fueled by consumer spending. China's new leaders say they're willing to sacrifice slower growth in the short term to make the transition. But so far, they've delivered weaker growth, not changes in their economy. China is expected to account for 13% of global growth this year, down from just 5% in 2006. So as China's economy slows, there are ripple effects for the U.S. economy and investors. For a checkup on China's economy and its banking system, I'm joined by Scott Climo, Director of Research for Saturna Capital and Deputy Portfolio Manager for Amana Funds. Scott, welcome to the program. Thanks so much for joining me.
Thank you very much. Nice to be here.
I want to start off with your thoughts on the growth outlook. Policymakers are targeting 7.5% GDP this year. There are concerns growth could clock in lower as manufacturing weakened in the first half of the year, but the economy is showing some signs of stabilizing. Did China's economy bottom in the second quarter?
Oh, I think it's far too early to make that sort of claim. The signs of stabilization are few and far between. We have seen slightly better trade numbers in the latest figures, but there has been a lot of adjustment to those numbers due to a crackdown on invoicing to try to control shipping money overseas. And so part of the problem with Chinese statistics is it's often quite difficult to know what's really being represented by the numbers that are provided. So I don't think that evidence exists yet.
So do you think 7.5% is a realistic target for the end of the year?
Well, the GDP number would be the same as any other type of statistic. I don't really know what 7.5% is telling you in China.
So you think it could be lower than that?
I think it's quite possible that it's lower. You can look at other indicators such as electricity generation, such as the trade figures, certainly the Purchasing Managers Index, which has been negative for 3 straight months, railway traffic, and those sorts of indicators do not show an economy growing at that sort of rate.
Well, China's certainly trying to rebalance its economy away from being dependent on infrastructure spending towards one that's dependent on consumer spending. And Chinese authorities have said they're willing to sacrifice slower growth in the interim. I mean, how do you grade China's rebalancing effort so far?
I'm not sure that there's been much of an effort. On one hand, yes, they have said they're willing to accept some slower growth, but you had the Minister of Finance saying we can accept 6.5%, and then Li Keqiang, the premier, said very shortly afterwards, so 7% is our bottom number. And the idea of government officials saying this is going to be our GDP growth figure itself is somewhat anomalous because it's not something you can wave a magic wand and achieve unless you're willing to accept serious distortions in other areas such as your inflation or your currency exchange rate or those sorts of issues.
Well, they did take that first step towards, or I should say ceremonial step, towards liberalizing the financial system, right? They did away with the government-imposed floor on interest rates for loans. I mean, there was some criticism that if you want to spur consumer spending, you should lift the ceiling on deposit rates, but certainly was that a step in the right direction?
Anytime you remove a government-imposed control over what should be a market-determined price, such as interest rates, and interest rates are just a price for money, it's a step forward. But to just do it on one half of the equation, as you referenced, is not getting the job done. And the real problem is the cap on the deposit rates rather than the lending rates, because the last thing in the world China needs right now is lower lending rates to state-owned enterprises and to government municipalities.
Yeah, I want to come back to the credit concerns regarding China in just a moment. But to your earlier point on the lack thereof of rebalancing efforts, it does seem that China's economy is still largely driven by infrastructure, by real estate, by manufacturing, and those are the items that are driving income, right? So if you pivot away from that, what does that mean for incomes, which, by the way, fell in the first half of the year?
Well, it's a little bit of there are different things that are going on, and you do have some rebalancing in the sense that Chinese workers themselves are forcing a change in the relationship between employers and between employees. You've seen increases in wage rates. Foxconn in particular, which is a major manufacturer for Apple, has been kind of the poster boy of that development. And companies are talking about being priced out of China and looking at cheaper places to go. So on one hand, you can say that has a negative impact on investment, but on the other hand, it is good that the workers are receiving a a more of a livable wage going forward.
Scott, why not simply let the yuan float? Right, I realize immediately if you did that, that would create a lot of imbalances within the economy, but at least right now, let the yuan trade in a significantly larger band than it's trading now against other currencies.
Well, I can't necessarily speak to what China should be doing in that regard. It would be a big step, and I don't think the country, either in terms of the financial system or in terms of the way that people who have money in China think about where that money should be, that it's necessarily ready for that. Part of the problem you have is there is something of a concern about what is the future for the RMB or for the Chinese yuan, what is the future for the Chinese economy, and so people who have money are trying to get it out of the country, and many times, and that's why you've seen this crackdown on the invoicing for the import and export activities. So if you were to widen that band or free up the ability of the currency to move in and out, I think you could end up creating some pretty significant problems that they're not quite ready to face yet.
Do you think that the best days of growth are behind China? And what does that mean for attracting foreign capital?
Well, best days, you can look at it in two ways. You can look at it as either a qualitative issue or a quantitative issue. So if we want to just say big numbers, yes, the best days of China's growth are behind it. It's not going to grow at 10% as it was in the past. But China could experience a much better quality of growth going forward if they are able to rebalance the economy and if they are able to pull away from driving activity through real estate speculation and other, state-owned enterprises and municipalities engaging in white elephants and trophy projects.
Well, you're right. You mentioned real estate speculation, right? We can't talk about China without talking about credit, right? That so-called growth miracle we've seen since 2009 has been thanks in large part to credit, and now it's taking more credit to create the same amount of growth. You're seeing questionable loans doled out through the shadow banking system. My question is, are there parallels between the U.S. subprime crisis and China right now? Is there a credit bubble waiting to burst in China, or do authorities have it under control?
I think the more appropriate analogy, rather than the U.S. subprime market, would be Japan in the 1990s, because the credit activity, to an extent, there is obviously real estate lending. I think it's fair to say a bubble going on, but it's not as if it's a broad-based activity across huge swaths of the Chinese population. You have a certain percentage of the population which is wealthy, and they're engaging in real estate speculation. In the United States, most everybody was in on the game of the mortgage activity that was going on prior to the global financial crisis. So it's really more like Japan in that the government is doing things, I think, to prop up state-owned enterprises and municipalities that have some problematic debt issues, and so that's what I would look at.
What's your sense of the stability of the banking system now, right? We saw a little bit of a credit crunch earlier this summer where interbank lending rates spiked. What's your sense?
Well, it clearly has challenges. We did see that, and the only reason that happened and then subsequently was addressed is that the People's Bank of China decided to withhold liquidity from the system. I think they were trying to teach people a bit of a lesson, and were somewhat shocked themselves by how quickly the interbank rate moved up into double digits, and of course the significant impact that it had on the Shanghai Stock Exchange, dropping 6% in a day. So they quickly went about face and putting the required liquidity to solve that problem. But I don't think there's any doubt that you have what we used to call kind of the zombie loans in Japan amongst the corporates, that the exact same thing exists among the state-owned enterprises and municipalities in China.
Scott, as growth in China slows and credit becomes a greater share of China's economy, would you expect more credit problems to surface, more defaults on loans?
Well, this is the issue. Defaults, with the fact that the government has controlled or continues to control the deposit rate, and has eliminated the controls on the lending rates, but before those lending controls were eliminated, banks had a guaranteed minimum margin of 90 basis points that they could make on any loan because of the gap between the deposits and the lending. And so bankers just sat back and handed out money to state-owned enterprises and municipalities because it was a guaranteed return. They didn't really have to do any work. And that's from their perspective, that was probably a smart thing to do because the government will back those up. So will those types of loans default? No, I don't think so, but there may be other ramifications that represent the challenges that are being faced by the banking sector.
Scott, as an investor, you look at the Shanghai this year, and it's been a wild ride down for the most part. Until China rebalances its economy, until it finds a new viable growth model, do I avoid investing in China? And I mean through mutual funds that invest on the ground there in local Chinese companies. I mean via ADRs. I mean through multinational companies like Caterpillar that derive a large share of profits from China. Do I avoid China?
Well, that's quite a broad swath of things to avoid, and I don't think I would make a blanket "don't touch China." Certainly, you're right about the Shanghai Index. The CSI 300, which is the broadest index in China, is still 60% below its peak from 2007. It's been a desultory performer for a number of years. But even in bad markets, there are always good companies, and so we do own some Chinese companies, and we certainly do own companies that have exposure to China. So I wouldn't advocate a blanket.
So how do you navigate that now, Scott? I mean, do you look at companies that are more tipped towards the consumer in the hopes that when China does rebalance, you get in early there? Do you avoid some of the manufacturing industrial names?
No, that's absolutely correct. I mean, we are consumer oriented with regard to the exposure that we have to China. I would not want to be industrially oriented. Caterpillar, for example. I mean, you only have to look at what's happening in Australia to know the weakness of that sort of activity in China. Australia has been providing all of the minerals and the raw materials, and that has just fallen off a cliff. You know, their currency has depreciated some 12% in the last 3 months versus the U.S. dollar. So no, I would not be buying things of an industrial or that kind of nature. But there's still all good consumer stories. I mean, even though we may not think that, and well, we're correct in not thinking that China has not done all that it can and all that it needs to do to rebalance towards the consumer, we still have double-digit retail sales growth in China.
All right, we'll go ahead and leave it on that note. Thanks so much, Scott, for joining me today. I appreciate it. Hope to see you soon.
Thank you very much.